Welcome back to another episode. If you don't know, my name is Nolan, and this is Solving Life. Today, we'll be talking about something that a lot of new investors and traders don't think about, and that is taxes, and why it is super important that you take them into account when buying and selling options and stocks. A new investor who is just testing out the stock market will likely make a lot of trades. They will usually buy a couple different stocks, see the price go up, and think, great, I'm up and made money. They'll then sell some of those stocks because they're scared of the price going back down. And then they'll just kind of repeat that process. A lot of beginners don't take enough time to fully prepare and come up with their investing strategy before they start, and they don't have a true end goal other than just making money. Now, some of that is due to experience, and that will come in time. Nobody can just enter a new world and know exactly how they want to navigate it, and no amount of research will 100% fully prepare you for your first hands-on experience of investing in the stock market. The best thing for anyone who is getting into the stock market and wants to invest in a better future is to make sure you cover most of the basics before you even invest a single dollar. Make sure you look up and understand a few different investing strategies. Are you going to buy and hold stocks? Are you going to trade options? Or are you going to invest in mutual funds and ETFs? Make sure you understand how the market works, what makes up the stock price, and how the market cap is calculated. You can't know why a stock will go up or down if you don't understand the market at its fundamental level. You need to have a timeline. It's really important to know what kind of gain you hope to achieve by a certain time, so you can see if you are on track, and your timeline will affect many different areas in your taxes, your strategies, and your end goal. Having a clear goal is very crucial in everything we do. If you are not working towards something, then you are on your way to accomplish nothing. Another super important point to understand before you start investing is to invest in great companies that you believe in, and not get lost in get-rich-quick schemes. Yes, it is possible to hit big, but it is also possible to win big at the casino. Investing is different than gambling. You invest in companies you believe in. You invest in companies with great structure, financials, and outlook. Gambling should only be done in moderation at a casino. In other words, keep it out of your investments. It's also important to know that you are a beginner, and you will have to learn a lot in order to accomplish your goals. You will lose money at some point in your investing lifetime. That is okay. It happens to the most accomplished investor. Take your lumps and learn from them. Tell me in the comments below if you want me to expand on any of the topics in this video. So, now that you've done your research, you feel pretty good about investing. So you download your favorite investing application and get to work. You win some and you lose others, but after a year you're up a total of about 8%. You're very proud of yourself. You go online and see what the average returns are and think, hey, that's not too shabby for a beginner. You get to work filling out your taxes, and yeah, you have sold some stocks this year, but everything you sold just went towards buying different stocks, so you're in the clear. You didn't get to realize any of those profits, so it shouldn't matter, right? Unfortunately, this line of thinking couldn't be any further from the truth. You pay taxes on the sale of any stock that you make money on. You have to pay taxes on those sales because it is considered a capital gain. It doesn't matter if you never see that gain hit your bank account because you used it for further investing. That is why it's important to have a game plan before you invest in any company. Now, this capital gain can be taxed under two different umbrellas, long-term or short-term. We will start with the short-term capital gains tax. When selling stocks or options, the short-term umbrella is generally taxed at a higher rate. Looking at the chart, we can see the breakdown. The lowest tax rate is 10% for anything under about $10,000, rounding up. 12% for everything up to $40,000, 22% for everything up to $85,000, all the way to the highest rate not actually on screen of 40% over $500,000. Now, I'm sure most people watching are not moving that kind of money around, But it is important to see how much some of those tax rates are and how it can affect you as your portfolio grows over time. Another thing that needs to be noted is that short-term capital gains are not limited to what you do on the stock market. I do not mean to make this seem like an aside, because it actually is very crucial in determining your tax rate. Your yearly salary is the determining factor when seeing which tax bracket you qualify for. So if you make $60,000 a year, any trade you make money on will be taxed at a rate about 22%, unless those gains you make trading put you into the next tax bracket. So, what does that mean to you as an investor who has made some trades? To keep with the investor we mentioned earlier in this video, who was excited about their 8% return, we will use that example. And with this example, we will say that he has sold all his positions right before the year ended and put them in a stock like Apple or Tesla. Let's say that this person started the year trading $10,000, and after his 8% gain, he was able to buy $10,800 worth of Tesla. So, this person has to report the $800 as capital gains. Since he makes $60,000 a year at his job, he gets taxed at 22%. So, $176 of his profit is going to the government. That lowers this person's yearly gain on the market to $624, or 6%. The other umbrella your stock sale could fall under is the long-term capital gains tax. This tax rate is far more favorable to investors and really rewards them for holding their positions for over a year. For long-term investors who eventually sell off their positions, their tax rates fall under 3 brackets. 0 for investors who make less than $40,000, 15% for investors who make less than $434,000, and 20% for anything over the previous bracket. As you see, this greatly improves with the more money you make, with the tax rates falling from 40% to 20% under this structure under the highest bracket. The middle tiers get combined to just a 15% flat rate instead of the 22 through 32% rate, which could also be cut in half depending on where you fall in that range. Going back to our example earlier, we can see the difference even in this very low dollar amount trade. So we have investor 2, who starts out with $10,000 and sees a year and we'll just say a day or so for theoretical purposes return of 8%. So he'll be taxed on the $800 of capital gains that he has made. With his yearly salary still at $60,000, his tax rate will now be 15%. That means he will pay $120 in taxes. That will bring his total gains after taxes to be $680, or rounding up to 7%. Comparing the two together, we see just how beneficial holding stocks for longer than a year can be. With the same numbers, we see the short-term holder paying about $50 more in taxes, or about 1% of their return going to the government. The difference you pay in the taxes get wider and wider the better your return in the stock market is, and the more your taxable income from either your salary or other avenue rises. I hope this video was informational for anybody just getting into investing and how buying and selling stocks will affect your taxes at the end of the year. Many day traders do end up owing on their taxes when they do extremely well, and I don't want anybody to be blindsided by the ramifications on their trades. Thank you for watching. Tell me in the comments section below if you're a long-term investor or have a more short-term time horizon. Make sure to zap that like button and subscribe to stay up to date on the channel. Follow me on Twitter at SolvingLife2. Thanks again for watching. My name is Nolan, and this is how we solve life.